SBF was just released on a $250 million bail agreement, which sees him staying at his parents' home in Palo Alto under house arrest. In a crazy turn of events, they have officially agreed to SBF's bail, and I want to run through exactly what the terms are and what this means going forward from the case. After we discuss the SBF news, then I will be going on to talk about the tokens that I think are going to significantly struggle next year that have some pretty severe unlocks. And I've also got a strategy for you guys to take advantage of unlocks and inflationary assets heading into 2023. So that'll be in the second half of the video. That's going to be an alpha packed segment. And to start with, we're going to do a recap on the SBF case. Smash the like button and hit the subscribe button if you're not already subscribed to the channel, and join the family. Let's get started. So SBF was granted the highest ever pre-trial bail of $250 million and is to be released to his parents' home in Palo Alto. The SBF story is far from over as he landed on US soil today, obviously in New York, and stood before a magistrate in the Southern District of New York, where he was indicted on 8 counts of financial crimes. If we look at some of the crimes that he was indicted for, it was obviously wire fraud, conspiracy, securities fraud, and money laundering. And all these cumulatively could see him land in jail for up to 100 years plus. Now, we obviously saw Caroline and Wang agree to their plea deals, which likely receives reduced sentences on their behalf. However, Sam Bankman-Fried, he's the one in the limelight. He's the figurehead of this entire scandal, and there are a lot of advocates pushing for him to get quite a harsh sentence here. So that's potentially something that we can see. But I think it took a lot of people by surprise that he was actually issued not only bail, but also was able to come up with such a high fee of $250 million. And I'll get to in a second exactly how they actually came up with that fee, because the answer is a little bit unexpected and it isn't exactly what meets the eye. So at the culmination of the hearing, SBF was granted $250 million worth of a bond signed by the defendant and his families, and a non-family member secured by the parents' home where he will live in Palo Alto. So obviously this is the highest ever pre-trial bond. If we look at the Bernie Madoff case, one of the biggest fraudsters of all time, he was released on a $10 million bond. So this is 25 times bigger pre-trial. Now, we have seen billion-dollar bonds post-trial, but pre-trial is absolutely crazy to get a bond this big. And that is because Ruse, one of the US attorneys, said it's a fraud of epic proportion. So if that was the only test, detention would likely be appropriate. But he voluntarily consented to extradition, and that should be given weight. So the court is certainly factoring in here the fact that Sam did agree and was pretty easygoing with the extradition process. Of course, he may have had his own reasons for doing so, which gave him a little more favor in the eyes of the court. So given that SBF had not resisted extradition, the assistant U.S. attorney Ruse argued that he would not oppose SBF's release on bail. While at home, Ruse explained that he would be given treatment for substance abuse and be restricted from making any financial transaction in excess of $1,000. So I don't know how Sam's going to get his Adderall now without approval from the government. Had SBF not consented to extradition, his defense counsel claimed that the process may have taken months or years to complete. The judge granted bail on the provision that he surrender his passport and be under house arrest with the assistance of a GPS tracker. And he was asked if he understood if he violates the conditions, a warrant will be issued for his arrest. And he said, yes, I do. They adjourned court, and he was let on his way to live with his parents, who are actually Stanford professors. And his father, Joseph Bankman, was actually due to speak or lecture in front of his class today and had to postpone his lecture in order to assist SBF in court. So they are still going on with life as usual as college professors while their son goes through this mess. And we know they were somehow involved with the FTX saga. I'm sure we'll get more information on what their exact role was in the future. But for now, it seems like they're almost off scot-free in the eyes of the law. So let's take a look at a few images of SBF yesterday, and let's have a look at the house that he's staying in, as well as some images of him and his parents and stuff. So disheveled-looking Bankman-Fried was fitted for an electronic monitoring bracelet before leaving the court with his parents and lawyer. Interestingly enough, he's actually holding a New York City bagel shop bag, so clearly he got a nice snack after eating vegan prison food for a couple of weeks on the way home from court. He ignored the swarm of reporters and cameras on Pearl Street and hopped into a grey Chevrolet. We can see him here with his little bagel bag. We can see him getting into the car here, kind of being pulled by his security. Him in the car with his dad. His dad's certainly not looking too happy. I don't know if that's because his son's in jail or because he's missing his lecture. One of the two. We got a little illustration here of Sam, his mum, and one of the marshals. And then also this is the house in Palo Alto that he's staying in. So if you don't know Palo Alto, it's a city in California. I guess a pretty expensive area though, because this house, although looking quite unassuming on the outside, was valued around the $5 million mark. Some people said it was $8 million. I think the court listed it conservatively, as they will tend to do with their estimations, at $4 million. So this is the house that he'll be staying in. Needs a bit of landscaping work. Maybe if he's allowed outside a few meters, he can get the clippers out and do some work on the bushes and stuff. But yeah, this is the house that he's going to be staying in for, I would say the next few months, but who knows how long this case can go. This could potentially be an extremely drawn out affair. And in fact, I expect it to be like a multi-year proceeding. So we could definitely see, Sam on house arrest for quite some time here while the US gathers its evidence. Obviously, there will be more information that comes to light from other parties that have been pleading guilty. Obviously, over the last few days, we've had Gary Wang and Caroline Ellison actually agree to cooperate as well. So the US magistrate says he'll permit the release with the proposed terms, but needs to be very strictly supervised. So they are going to have strict supervision, and also he does need to have mental health and regular treatment and evaluations in order to affirm that he is still mentally sane and isn't going to do anything crazy. We can actually see a video that Mario posted of SBF walking out of the court, being ushered by one of his lawyers and marshals as well. We could see him hanging outside the court, presumably before he gets his bagel, because he doesn't have his bagel bag here. So that's the video of Sam wearing his now, I guess, trademarked like navy blue suit. So I want to look now into exactly how he got this bond, because if you guys don't know, SBF was touted for saying, or not touted, but caught saying, I'm basically out of money. I've got $100,000 left in my bank account. And, I basically have nothing. But, it's caught a lot of people by surprise that a guy that says he has nothing a few weeks later now is coming up with $250 million worth of a bond. So I've done some digging and I've broken down exactly where his bond came from. So firstly, if we look at the United States District Court for the SD of New York appearance bond agreement, we can see that the bond indeed was $250 million, so $250 million. However, it is essentially secured not by cash, so not by a physical deposit of a quarter bill, but by his parents' home in Palo Alto. So that same home I showed you before, this home is being used to secure the actual bond agreement. Now, if you don't know how the bond agreements work, they only require 10% of the total capital to be deposited and secured initially. Obviously, if he flies and escapes the country, then he's going to owe the full amount. But the fact that he is agreeing to house arrest and agreed to extradition and is filing proceedings, they are only requiring him to pay 10% on the first day, which is why the $4 million to $5 million valuation on his home was used as a quarter of the cash that was used to secure this bond. However, you might be thinking that's only $5 million. There's another, $20 million that's unaccounted for. Well, we also know in the statement that there's one relative plus an outside party that contributed that weren't his parents. So technically, there was $21 million from a relative or an outside party that used to support Sam in this endeavor. So I'd be very interested to know who it is, but right now it's anonymous. So basically, he didn't himself put up the money. They used the house to secure the first 25%, and the remainder of the 75% was secured by a relative and an outside person. So very interesting there. He obviously didn't come up with the money himself. So to the people saying he's using investor funds to secure it, he potentially could be, but we can't affirm that right now because we just don't know who this outside person is. Of course, they could be from FTX. They could also be a politician. They could also be, another, friend or confidant of Sam's. We don't exactly know, but the public was outraged. So there was many tweets, and if you guys have been on Twitter, you'd probably know, like directly after this announcement, people were outraged that he was even let off in general. And was even able to come up with the $250 million. So Rager, for example, said, SBF get out of jail card. We all knew it was coming. Second largest Ponzi in history. Many lives ruined. In return, he gets to sit at home in Palo Alto and play League of Legends. Gotta love the justice system. And I do get this sentiment, but you have to understand that, this is a temporary measure and eventually he is going to be sentenced. However long it takes, maybe it's months. It very likely could be years. And when he is sentenced, then that is when he will be serving his justice. And I highly doubt he gets anything less than 10 years. So he can enjoy his League of Legends for now. He can get it out of his system. But I do think eventually justice will be served. And the fact that we, now have news that Gary Wang and Caroline Ellison are pleading guilty and cooperating, that's kind of more evidence that the chips are stacking against him, because obviously this is a case against primarily FTX, but specifically SBF. So having Gary Wang and Alameda agreeing to cooperate with the Southern District of New York, that likely means that there could be more information. They were obviously close confidants, being co-CEOs of Alameda and FTX respectively, that could potentially provide more information that can lead to an official prosecution of Sam Bankman-Fried. But that was pretty crazy news yesterday. While Sam was on the plane, FTX's Gary Wang and Alameda's Caroline's pleads, as well as their cooperation, was announced by the Southern District of New York. So that was pretty crazy. Caroline facing huge sentences here of up to 110 years in prison, over 7 sentences, basically all the sentences SBF was framed for, as well as, or technically not framed, but put down for, as well as the Alameda side of things, because obviously she was responsible as CEO of Alameda. So any wire fraud or any dodgy business when it comes to lenders or counterparties of Alameda, that falls under Caroline's jurisdiction. One of the reasons why she was sentenced, or not sentenced, but could be facing a maximum sentence of 110 years in prison. And then Gary Wang, the co-founder of FTX and the CTO of FTX, he pled guilty to 4 charges, and he's also facing 50 years in prison. And I don't think they're the last. I mean, you've got Dan Freebird, you've got Sam Trabucco, you've got other members, and like Nishad Singh, that were all close to FTX and were likely involved in some wrongdoing, and they're going to have to talk now, because with the Southern District of New York, if you watch yesterday's show, if you watch the video, he said, we're not done. If you are involved with FTX, we're coming for you. We're going to act quickly. And I would highly suggest that if you have anything to say, you come up and speak now and make things better for yourself than waiting later for us to catch you, basically is what the essence of his message was saying. So I expect there are going to be many more arrests and many more pleas as well. I mean, Gary Wang, Caroline Ellison being fairly young, I guess were kind of like, when you're facing 110 years, you kind of are forced to cooperate, or you're going to end up facing the full 110. Now it's highly likely that they face a fraction of this, maybe 10% of these maximum sentences. Like Caroline very well could get 5 to 10 years if she cooperates, helps give the government information. And the same for Gary Wang. He could be out in just a few years, to be honest. Let's see how harsh they are on these guys, but they are very valuable to the Southern District of New York, because given the fact there was not very good auditing done by FTX and it was a complete mess, these guys are basically the only ones that have the information behind exactly what happened and can really help the government push down the right path of what to look for, what forensics to conduct, what chats to unencrypt, what counterparties to speak to. These guys can actually really help, and that's one of the reasons why I do expect their sentences to come down. SBF, on the other hand, well, I mean, you can only expect they're going to want to make an example out of him. So that is the SBF news. Big news that he is finally getting released from bail. Let me know what you think in the comments of this news before we move on to the next segment. Let me know what you think. Do you agree that he's released on bail? Are you surprised? Let me know your thoughts in the comments below. Now let's get on to a segment which I was actually originally going to make this the whole show, and then the SBF news came out. I'm like, wow, I got to cover that. That's massive news. But I want to go into more of my alpha segment. You guys know how I've been splitting the shows up, is first half news, second half alpha. And I do have a pretty cool strategy for you today. And what that is a strategy for those that are willing to take it, and B, a warning for those that are holding these tokens or were thinking about buying these tokens. What I want to look at is the tokens with the most severe unlocks in 2023. Now, here's the problem. When tokens released last bull market, a lot of tokens released in 2019, 2020, 2021, they were all hit with quite aggressive vesting schedules. Now, not every single token had an aggressive vesting schedule, but typically what would happen is you'd launch a token, you'd put 30% into the market, and then you'd have the remainder of the 70% releasing over a few years. We call this vesting. So when you have investors invest in the seed round, obviously they don't get all their capital at once. It's spread out over time. Now, what this means is, because we had a flurry of unlocks a couple of years ago, we're now hitting a point where we are still seeing emissions coming out from these protocols in the form of unlocks, token unlocks. Now, in a bull run, this wasn't a problem, because last year, if there was unlocks, most of the time it was kind of bullish in a sense, because there'd be a lot of FUD around an unlock, And since there was so much capital and liquidity flowing into the system, every time there was an unlock, we ended up seeing post-unlock pumps. And that's why despite the unlocks last year, a lot of projects, even with severe emissions, continued to go up and up and up because there was just so much liquidity coming into the system. But now we're seeing the opposite. We're seeing liquidity being drained out of the system. So the tokens that have very severe unlocks, even though people are aware of these unlocks happening, we're seeing in many cases the projects are unable to withstand the supply side pressure coming onto the market because there simply isn't enough demand in a bear market. So I want to look at the tokens that could really struggle in 2023 that have the severe unlocks and explain to you maybe, and DYDX is one of them, as MTMD is pointing out here, maybe a strategy that you can use to take advantage on the short side, but then also a strategy you can use to take advantage on the long side. So that will suit different people's strategies. So there is a spreadsheet that is from Carl0x. I want to shout him out. He posted this on Twitter and he has a Substack. He works hard on the tokenomic side of things and he's aggregated the tokens by the most inflation to the least inflation. Now, I want to start with the tokens with the most inflation and talk about a bit of a strategy here. Now, clearly, DYDX is one of them. They have a current inflation rate of 251%, which is massive. That's a huge amount of tokens to be hitting the market. That actually puts DYDX as the third highest country by inflation rate if there were a country behind Venezuela and Sudan. So that's the kind of magnitude of inflation we're talking about here. GMT, which is Steppen, has 128%. IMX, 72%. Ape, 60%. 1inch, 60%. Cake, 40%. Curve, 27%. Uni, 24%. Axie Infinity 24, Frax 24, and if we scroll down, you likely hold a lot of these tokens if you're a long-term investor. You've got Near at 20%, Secret, AVAX all in the 20% range as well, even DOT. Now, look, there's a very big difference between a token that's emitting 20% next year to 200 to 60% next year. So the tokens at the bottom of this list, look, I'm not so worried about. A 5 to 10% inflation, that's not so bad. They're not the ones I'm going to be talking about today. The ones I'm really focusing on today are the ones with that 20+% inflation rate, specifically the 50+% range, which is a lot of supply in a market where there just isn't a lot of demand for tokens. So Jack Newald said, coins in the top 200 ranked by market cap FDV ratio, bonus stat, dollars remaining of token inflation. So he's actually ranked them based on the market cap to FDV ratio based on their remaining inflation in dollars. Now we have optimism extremely high. Now a lot of people ask me, Miles, you like L2s, you like the narrative, you like Arbitrum. We can actually invest in optimism now. It's also an optimistic roll-up alongside Arbitrum. Why don't you invest in it? And this is the reason, because it has a 1,800% inflation rate left. And I don't care what kind of market it is. It's extremely hard for a token to go up in price when you have emissions this steep. DYDX, 15-23% in terms of the market cap to FDV dollar amount of inflation left. Steppen, 998%. Guys, these are just crazy figures. Let's actually just look through it. Gala, 500%. Frax, 600%. Curve, 600%. Aptos, 700%. These are tokens that are severely emitting in the market next year. So how can you actually play this, right? The first thing I want to say is, look, if you own any tokens on this list, now, none of this video is financial advice, by the way. I just want to make that very clear. This is just a suggestion based on something you could do, and I'm not recommending you do this. It completely depends on your own situation, right? Just to get that, make that very, very clear. But if you do hold any of these tokens, I would be very wary about buying more. Personally, I'm not buying any of the tokens at the upper echelon of this list, nor am I buying any of the top 5 here either. Just because it doesn't make sense to me to DCA into a token which is getting so much supply hitting the market over time. So that's the first thing I'd do. If you do own these tokens, you could consider, if you have large exposure, you could consider getting that weighting down. I don't know if many of you do, but let's say IMX is your second holding for some reason, then definitely like a prudent thing to do from a risk management perspective would be to look at getting that weighting down. I mean, I could make that same argument at any time, but especially when you're hitting a year with such crazy inflation, especially in FTV terms. So that's something to consider. So that's the spot argument. Then we have the second argument of, okay, if we were going to spot sell, what's the difference between actually shorting this token? And I think it's actually a good point. Those that are very active in this market and those that understand the principles of delta neutral shorting and longing and strategies that you can execute, for you guys, it might be worth considering getting a basket of these goods, So picking a basket of the tokens that you're the most bearish on with their high inflation rates, longing Ethereum as a hedge against these tokens, shorting these tokens against ETH. So essentially, you're playing the short game on these tokens and you're playing the long game on ETH. So you're not exposing yourself to market direction. You're not betting on the whole market coming down. You're just betting on these tokens performing worse than Ethereum, if that makes sense. Or BTC. Depends which one you're more bullish on. Personally, it's probably Ethereum. That's a strategy that could be a winning trade in 2023. Shorting the tokens with a lot of unlocks, but hedging that obviously with an ETH or BTC long of the equivalent amount. Now, what this means is that you'll need to rebalance. As I said, this is if you're not like really in tune with trading and you don't understand how these strategies work, it's going to be very risky. Because yes, of course, you can get liquidated. Yes, of course, tokens could pump. Just because there's an unlock doesn't mean IMX can't double tomorrow if there's a bullish announcement, right? 100%. You can get wiped doing this. But if you're prudent and you know how to rebalance, then I think it can definitely be a winning trade heading into next year. Now, Dev said, shorting the unlock can be tricky, especially if everyone and their mum got a sheet. He's right. If everyone has a sheet, there's a market expectation that these tokens will dump in price. The only counter argument I'd make to that is, despite the market expecting something to happen, it's still probably likely to happen just because of market conditions. When there's just no liquidity coming in, even the most bullish news struggles to make a project pump. So what makes you think a bullish unlock will pump in a bear market? That's kind of my counter to that, but that is subjective and you have to weigh up how you view it. He said it requires experience and execution. I 100% agree. You may get squeezed easily. Projects tend to time bullish news and catalysts around them. Last big looks unlocked, it pumps 60% after it's unlocked and only started dumping a week after. So Carl says, he was the creator of the spreadsheet in the Substack, naked shorting with high leverage agree. Naked shorting means shorting a token with leverage and no hedging. So you're not long on the other side. You're not short on the other side if you're longing. You've got a complete directional bias. That is what naked shorting means. So he's an advocate for doing the pair trade, as I discussed before, and creating a basket of assets, not a single token, that you think are bearish due to their tokenomics, and then shorting those assets and hedging with an equivalent ETH long. So every time something moves a couple of percent, you're weighted on the other side and you keep rebalancing, right? Rebalancing decently, because it's impossible to like rebalance exactly unless you're on your computer all day, but rebalancing, let's say once a day. He's been doing pretty well off this in the past few months. Dev said that's likely the best way to do it. Sadly, I'm banned from Nance futures a euro. Another risk is it requires holding large funds on exchange for a long period of time to make it work. This is the other risk. Because most exchanges are the ones with these tokens, you can do it on a perp exchange, but not all of them have the trading pairs. You're going to probably need to hold on a centralized exchange like Binance for a few months to make this work. So you have to also weigh up the possibility of Binance going under or KuCoin going under. And I think it's very low. I think it's negligible, but it's still something to factor in. And it'd be irresponsible of me not to mention post FTX. He said also can't leverage here, risking part of basket liquidation. Most will just 20x short and die. So yeah, if I ever did this, I'd be doing this on like the lowest leverage, 2x leverage, being patient. You can even do it on spot. So you can actually short tokens by borrowing them on a DEX and then selling them instantly for Ethereum or a stablecoin. Technically, that is shorting a token. If you wanted to do so without leverage, you can do that on a DEX because selling and shorting are the same thing. Just typically one's done on perps and selling's done on spot. That's the major difference. And also perps, you have leverage, of course. So this is a strategy that if you're on the more risky side, you can execute. I just wanted to frame that idea for you guys. For the ones that want to maybe are interested in that kind of strategy. But for the ones that aren't, and I completely understand, in fact, most of you won't be because that's a risky thing to do, then just keep your eye on these tokens. It's extremely risky to be holding them in this market. And also, there will be opportunities to accumulate some of them in this market after their unlocks. Now, maybe it's not after their first unlock, maybe it's after a few unlocks. So you can definitely play the spot game here of take advantage post-unlock. Now, I want to talk about DYDX as my first example. I believe to some extent, Jordy's a bigger advocate of this, as I posted on my Twitter, that order book style perp dexes are the future of dexes. Now, Oracle-based dexes, I think they're going to have their niche. I think they're kind of like casinos. They definitely are going to fit into the future landscape of dexes in some way. But in terms of dexes that could really like scale and become big and get institutional capital, I think you do need to take the order book style approach because that is essentially the most fair and true to what an exchange is at its core method of conducting a DEX. So Geordie says he thinks it's the most likely narrative of the next 2 to 3 years from a risk-reward perspective. He said people are no longer trusting centralized parties. They want to see proof of reserves in a decentralized manner on-chain. DYDX is one of his favorite projects in this niche. He also stated a couple others. He likes Drift on Solana. There's also a couple more he couldn't talk about that are launching soon that he'll maybe reveal in the future. But basically, he's on the lookout over the next 2 to 3 years to position himself in DEXs that are taking the order book style approach. Now, DYDX is one of them, and I'm pretty bullish on DYDX's tech. In fact, as an exchange, I think it's brilliant. I think the idea is brilliant. I think long-term, it's one of the best projects in crypto. Here's the problem. The token and the project are very different. And this is where some people get things wrong in crypto. DYDX in particular, it has a very strong token, but the actual tokenomics are just not as strong. It has a very strong project, strong founder, strong tech. The token itself is not as strong as the project and the tech. And one of the major reasons for this is due to the severity of their unlock schedule. So that is why it's the number one most inflated token next year, because around about February 1st, we see this massive unlock with like 30% of the total token supply coming onto the market, followed by 100% total 2 weeks later. And then within 8 months' time, we see over a 3x in the total circulating supply of DYDX via emissions. So this very, very, very steep schedule is the reason why, despite me being quite bullish on the tech of DYDX long term, I'm not bullish on the token right now. You can see this green line is where we are today. So what could be the play if you're bullish on DYDX? It's actually quite simple. Wait for the unlock and maybe even wait a few months, because what can happen is it can unlock and then pump like Looks did. But it will take some time for the unlock to set into the market. It will take some time for the full effects of it to kick in, because there can be pumps. Buy the rumor, sell the news, 100%. I would say it'll kick in after a few months, after, maybe we get a little pump and then supply. And then around July to August, July to September, that is kind of in line with where I think the stock market could be starting to rebound. If we kind of look at the rate cycle as evidence, of course, that can change. But, as a rough timeline, Q2, Q3, that could be a stock market bottom period. Then accumulating DYDX off the back of unlocks, that could be a good play. So that's one I'm watching. Because obviously I won't buy now. Like, I may even short it, but in terms of my long-term approach to DYDX, I think it is a very good project long-term. So that's an example of a project that has strong fundamentals, but bad tokenomics. But, obviously long-term, that can definitely be an opportunity. Now, we look at something like IMX, very similar situation. They just had their major unlock, but until 2025, they are having continuous unlocks. Now, buying into a token like IMX, when you don't know when the bottom is, catching a falling knife on any token for that matter, when there's continued dilution, that's a very hard strategy to execute. Because not only is there a lack of liquidity in the market in general, but more token supply is hitting the market, and we don't know exactly when the bottom is. So this could bleed for the next year with unlocks and unlocks and unlocks. But IMX is actually a great layer 2 project. Fundamentally, it's the backbone of gaming and has what I think could be a nice NFT ecosystem developing around it. And their technology is very impressive. Now, from a gaming perspective, I do see IMX as a chain that can gain traction. So once again, like DYDX, fundamentally, I really like the project. However, the problem is these crazy emissions. And these emissions will take a while to set into the market. This isn't one I'm in a rush to buy personally. ApeCoin, well, their staking kind of failed in one respect, and they also have severe unlocks. This is not one I'm going to touch either for the next year or two. I'm just not interested. Like, I'm taking the lower risk plays in this bear market. I don't want to catch a falling knife on a coin that can go to $1. It's just not my strategy. And I'm not sure if it should be yours either. So I'm not really bullish on Ape for this reason. And I'm not short-term bullish on DYDX or IMX for this reason either. The unlocks are just too severe. So why don't you have a look at the projects that have diluted a lot of their supply? Because these are the projects that we know aren't going anywhere price-wise in the short term. Now, here's a list on Masari of the projects that are either deflationary or have very limited supply. Obviously, just because the token has low supply doesn't mean it's good. In fact, the project comes first for me. The team comes first. And then after you've worked out whether they're fulfilling a use case, they have utility, and they've got a good team, Then you look at the tokenomics and then you verify it. Like you line the two up and you work out if there's a discrepancy, right? So it needs to be a good project first. So just because Terra Luna Classic's deflationary doesn't mean it's a good buy, because it's a shit token, it's a shit project. You have to look at the ones that are good projects with good tokenomics. And when those two factors line up, bingo, that's when you can find a good project that's worthwhile investing in a bear market. BNB may be one of them. And I saw like Zero Hedge and a few other traders saying like they're short BNB. I'm long BNB. Let's see who wins in a few years. I think Binance does. So I guess the only real headwind with BNB maybe over the next year is what we've seen from the regulators right now is a shift towards centralized finance and a shift towards how strict they are being in terms of how they're measuring centralized finance. And what this means is that BNB and other centralized exchanges after FTX, they could be scrutinized. We've already seen Binance be scrutinized for their original ICO in the eyes of the law. So that is the only headwind with BNB. If they had no kind of legal headwinds, I would be like even more bullish on this token because I think it's a great token. But long term, yeah, that's a headwind. So that's maybe something to watch out for, but it's still one I put in my upper echelon of projects. Look, I'm not going to go through every project here, but I'm going to point the ones that stand out. So let's just go through this list. I'm not actually bullish on that much on this list, to be perfectly honest with you. But these are all 0%. So we're going to start seeing some better projects as we get to the 1 to 2% range. Bitcoin and Ethereum. Obviously, Ethereum's a clear example of a token that is technically inflationary, but could become deflationary. Now, I don't expect Ethereum to become deflationary anytime in the near future. But we can see it's made a huge impact. Ethereum going deflationary versus when it was on proof of work and it was inflationary. I mean, the supply change is pretty drastic. It's only emitted 2,000 tokens. That equals like around $2 million, right? $2.5 million worth of supply that's come onto the market in the last 3 months. On proof of work, if it never merged and it was still on proof of work and not proof of stake, that's over $1 billion worth of tokens that were to be emitted that weren't. So it saved itself $1 billion worth of emissions from going to proof of stake. And I don't think, and I agree with Jordy, he said this on the show last week. Haven't watched the interview, by the way. Watch it. It was released on Friday. It was absolutely brilliant. He said, I don't think the merge is fully being priced in. I don't think the monetary benefit is being fully priced in. And I would 110% agree with him. The positive benefit of the merge long term, we're yet to see it because we're in a bear market. But you just wait until the activity on this chain spikes again. Because right now it's extremely low, as most chains are. It will become significantly deflationary. It already became deflationary for a couple of weeks in a bear market. Just wait and see what happens when we get some more hype back into the market, when we get more traders back into the market. Of course, this could take a while. It could take a year. Like the timeline could take a while to get there, but eventually it's going to happen and ETH is going to burn like crazy. And that's why Ethereum from a tokenomics perspective is now actually quite strong. You've got Bitcoin as well. Obviously, that's kind of like the quintessential model of how to limit supply. Obviously, they have their halving cycles every 4 years. They halve their supply. Right now, it's 1.75%. Next cycle, it halves again and then halves again 4 years later. Bitcoin halving is like a year and a half away. That's another one. Someone in the comments said Illuvium over Gala in terms of vesting unlocks. Yeah, Gala's another project that's a great project, a really good project with really good games, but with a subpar token. So it's very important to differentiate the token and the project here. So in terms of my unlock strategy overall, to summarize, there's a few options. I'll just summarize it again, but just to make it very easy and clear to understand. If you own these tokens, just be wary. If you don't own these tokens, be very wary of buying them into their unlocks. If you are a more experienced trader and you're looking to assume some risk on what could potentially be a fruitful trade over the next 6 months, maybe consider shorting a basket of these tokens against the Ethereum or Bitcoin pairs. Okay? So that means going short against the basket on one side, obviously low leverage, like very low, in fact, even spot on dexes if you can. And then on the other side, doing an equivalent long and rebalancing when you need to keep it relatively delta neutral. That's one strategy that you can do if you're slightly riskier. And the third one is maybe just buying the tokens after their unlocks if you're bullish on them. So I like DYDX, I like IMX. Like many tokens, I'm not in a rush to buy. I actually like Frax. I know their emissions are high, but they actually just halve their emissions and they are burning Frax actively. So they're a project that actively kind of manages this. And that's also something to keep into account. Tokenomics aren't just as simple as looking at their inflation rate and saying, wow, this is bearish, this is bullish. This is emitting 3x its market cap. Wow, that's bearish. Because the thing is that the supply schedules only show one side of the picture. What they don't show are team initiatives. For example, burns and buybacks, incentives programs, airdrops, which is a form of incentives programs, yield farms. Like any demand side factor basically is not shown on a supply graph like this. And when you're researching every project, it's very important not just to look at unlocks, but also look at their supply side, at the demand side factors, right? And incentives that can potentially, A, create more demand, and B, supply side factors like burns or buybacks, which reduce demand but aren't shown on unlock schedules. Because the unlock schedules are often based on the initial white papers and not based on the updated announcements that a lot of these tokens make as they kind of pioneer new strategies, initiatives, and tokenomics. For example, Chainlink launched with awful tokenomics. The major criticism of Chainlink was, like, we need oracles clearly in crypto to connect the real world to the crypto market, but why do we need the Chainlink token? Because it's not really needed apart from projects paying in Chainlink, which Chainlink might just end up selling anyway. So why do we need Chainlink? And Chainlink obviously were aware of this, and they implemented Chainlink 2.0, which implemented staking, a bit more of retail side demand for Chainlink, as well as new use cases for the Chainlink token. Now, was Chainlink 2.0 perfect? No, it wasn't. Is the Chainlink token still as good as its narrative? No. In fact, if the Chainlink tokenomics were as good as the Oracle narrative, because Chainlink basically has a monopoly in that space, then Chainlink will be a top 5 project. It's not, because its tokenomics aren't great. But they could do Chainlink 3.0, and they could do Chainlink 4.0, and DYDX can do DYDX 2 and 3 and 4 and 5.0. The thing people have to remember is, if you have a good team that believes in the project, look at the product first, and then wait and see if they actually upgrade. Because I see a lot of people kind of judging a project based on its initial white paper, and that's not fair at all. Even with Atom, we saw the Cosmos Hub tokenomics proposal. Obviously, it got rejected. It's being tweaked. That is likely to help as well, the value accrual of Atom, because Atom is another token where it's a great project, but the tokenomics aren't great. So it doesn't mean things are linear. Things can change, and that's why you have to keep an eye on the market and not subscribe to past beliefs and stay very adaptive in your thesis. I think that's extremely important when we're looking at tokens with extreme unlocks. Now, what I want to do now, because that's the unlock section done, I want to look through just a quick market update and look through Bitcoin price, Ethereum price. You guys know my levels from yesterday. I want to update you on exactly what's happened. And the answer is not much, apart from the token showing weakness on the 1 and 4 hours. So for those who haven't watched the shows recently, there's 2 levels I've preached for the last few days. The first one is on the Bitcoin chart, 16.36, and the highs of the range at 17.34. On Ethereum, this corresponds with 1170 on the downside, and to the upside, 1300. This is the range we're currently bound in. And Bitcoin's kind of trading like a stablecoin. Extremely low volatility pre-holidays. Not a whole lot of news apart from SBF stuff and some like Binance FUD and that kind of stuff. And not a lot of catalysts for Bitcoin. I'm heading into another few months of rate hikes, presumably now according to the dot plot. Post CPI, we obviously saw that dump, and now we're back down into this range. So how am I trading this? I've explained this over the last couple of days, but I'll explain it again because it's my last show for the weekend. Obviously, it's Christmas. Merry Christmas, by the way. Hope everyone's having a lovely time with family. I actually got my grandparents down, and we're having a nice dinner tonight, and then Christmas we'll have a nice lunch. So it'd be good to have a weekend off and relax after the craziness of crypto. But I think it's important to state the plan now for the weekend, so we're all prepared heading into Christmas. Don't be that guy on TradingView at the Christmas lunch table, please. Don't have your CoinGecko underneath the table and refresh the prices. Take 1 day off charts, but if you have to trade, then these are the charts that I'm looking at. It's simply just longing Bitcoin at the bottom of this range, and shorting Ethereum at the top of this range. So why shorting Ethereum? Because it's showing weakness, in my opinion, relative to Bitcoin. And why longing Bitcoin? Because it's slightly stronger. Now, the difference may be minimal, but that's just kind of the logic. Short altcoins, long Bitcoin at the corresponding levels. Bitcoin, that's 16.3 on the downside. Ethereum, that's 117 on the downside. And on the upper end of the range, it's 1300. And for Bitcoin, it's 17.344. Now, this is smaller money. This is just kind of a range trade, hoping we get a bounce. And, you can make a quick few percent. that's kind of like the trade there. Obviously, setting your stop very tight. You're not going to risk much setting it below this wick. You're not going to risk much setting it above the previous wick. So pretty low risk trade, but it's also a small trade, right? It's a range trade. Now, range trades are never as profitable as breakout trades. You've got the big breakout trade if we actually break direction either way. So Bitcoin comes down here, tests this 17.6 level, comes back down and tests 17.3. That's a bullish retest to potentially go to 18.6. This is the big scenario you have to watch out for in terms of upside. And you can definitely, on the retest, get into a long there and set your stop just below the level. That's a pretty good risk-reward trade, in my opinion. That's for the big trade. And of course, to the downside, it's going to look similar. It's going to look like a breakdown of this to the 15.7 region. And then it has to make a big decision below 15.7 if it wants to go to 1500. So that's kind of the downside play. Now, obviously, breaking the range, that's going to be the big trade where the big movement comes. So they're your bigger trades. They're maybe what you'd call your rent money trades, where you can put more capital in. But for now, as long as we're range bound, I'll just trade within the range, set my stops above, and if we break the stops and retest, then I can flip long for what I think will be a bigger breakout, or flip short for what I think could be a bigger breakout. And remember, longing Bitcoin, shorting Ethereum and altcoins. That's the strategy. So hopefully I'll update you guys on Monday. I don't know if we're going to break in the meantime, but it's good to be prepared in case there's some Christmas volatility. We've been stagnant for the last 6 days, so another 6 days of this would be boring. Although, if you were following this strategy, now I'm obviously not going to lie to you. I started talking about this after the first retest, so I didn't predict this. But if you did follow a strategy like this initially, then we had a retest and then a bounce. So over the weekend, we could have a similar scenario where we have another retest then a bounce. If we do come and test the downside again. So if you do want to trade, you can trade on Apex. I recommend doing so because they are powered by L2, so they're extremely fast, and they're a DEX. So it kind of gives you the option to short and long perpetuals on an order book style DEX, which is exactly what we talked about on Geordie's show. The benefit of trading on order book style DEXs and how they're going to be a big narrative. Apex is one of them, actually. I should have asked Geordie about it, but we didn't talk about it. We mostly talked about DYDX and Drift. Apex being built on L2, having a BYBIT partnership, it's quite easy for those with BYBIT accounts to trade on it. So there's a link in the description to trade on Apex. Why? Apart from the benefits of decentralization and speed, the trading rewards. I mean, they're giving away $190,000 a week in trading rewards. So millions and millions of dollars over the next few months or over the next year to people that trade on the platform because they're new. And we know how new exchanges like to incentivize the early adopters. So if you adopt this early and trade on it, obviously they're just like a centralized exchange in the essence that you've got, you could set your leverage, set your stop loss. You could trade only 5 pairs, but they're adding more. You could trade just like you would on a centralized exchange, but also on a DEX. So keeping custody of your own assets. So if you want to trade, you can trade on Apex. And as I said, those are the levels I'm looking at over the weekend. I'll keep my eye on them. Now I'm just going to answer a couple questions whilst I kind of talk about my portfolio plan. Yeah, people asking where Ran is. Ran always takes Christmas off. And to be honest, I don't know. Like the guy's missed like 2 streams the whole year. Like he works so hard. Guys, give him a break. He deserves a week off. But I said to him, look, while you're away, I'm going to come hard with the alpha, help out the community, stay by the charts and kind of hold the fort down. So hopefully I'm doing that. Hopefully you guys are enjoying the content. If you don't normally watch my show, I do stream every day at this time, 7 to 7:30 p.m. EST. So yeah, but Rand is on holiday. I'll be on holiday in January, so he'll take over essentially at that point. When are we going to learn trading is no good? I disagree. Because here's the thing. Well, I mean, trading such a broad term. If you're referring to scalp trading or leverage trading, of course, like everyone's strategy is different. Some people's mindset and temperament and the way they view charts is much more suited to shorter term leverage trading. Some people, trading to them is just picking a hot narrative and playing the rotations. That's also technically a form of trading. Trading is not no good. Trading is everything in crypto, obviously. Like every time you buy and sell a token, that's a trade. If you're talking about the leverage trading, I also disagree. Leverage trading good if you have good risk management and also have adequate sizing. For me, for example, I put 5% of my total portfolio into leverage trades. 5%. If I burn myself and I lose all that money somehow, then I'm only losing 5% of my total portfolio. But what I gain is A, the experience of learning how to trade. 2, being in touch with the market, which is probably the most important factor. being in touch with this market and its movements is so important, especially during a bear market. Yes, it's a shitty market to trade right now. That's why our levels aren't hitting, and I'm not going to force a trade. So I'm telling you, those are my levels. If they hit, we'll trade. If not, we're going to wait. It's a crap market to trade because of the lack of the volatility. But when the volatility comes back, that creates opportunity. If you have good risk management, I mean, there's no reason not to. Now, if you are really averse to trading, don't trade. Invest in spot. I have a lovely DCA portfolio that I'm working on for you guys on Nested, where you can just DCA and copy trade my DCAs as a long-term, 12 plus 2-year time horizon, right? And we're going to average into this over the next few months. So if you want to do that, you can do so. Link in the description, and deposit into the Nested portfolio. But, if you do want to trade and put a few percent into trading, I don't see the harm in it. As long as you size enough of your trading portfolio to an amount that you're willing to lose. If you're willing to lose something and you lose it, you don't care. The only people that care are the ones that trade leverage with too much money, wreck themselves, and then get depressed because they traded with too much money, right? Just stop trading with too much money. Trade with what you're comfortable with. And that's the same for crypto in general. A lot of people are overexposed. If you're upset that your token goes down, that's because you put too much in. It's as simple as that. If you're going to be upset about it, it's because you put too much in. Or you just severely were overestimating the upside versus the downside and were maybe too confident. And I totally get it, especially when you're new to crypto. It's a hard thing to come to terms with. I came to terms with this investing during the bear market in 2019. And I even came to terms with it again last cycle because there were new reminders. There were a new set of circumstances like Luna, which we'd never really seen before. We'd never seen mass game theory and mass mechanisms like that play out on a multi-billion-dollar scale with that much liquidity coming in. And we learned new lessons. So everyone keeps learning. It's just about being responsible with how much capital you allocate to learning. And for me, there's no better cost of tuition than trading with real money. Of course, you can trade with fake money, but having some skin in the game genuinely, in my opinion, helps with motivation. Now, it's your choice if you want to put any money into crypto or not. I want to make that clear. Not financial advice, of course, but that's my mentality. And yeah, Christopher makes a good point. He said not 100x. Of course, depending on the type of trade you're taking, of course. If it's a really small time frame scalp trade, maybe you can go higher leverage, but low leverage is the way to go. Low leverage, sub 10%. Occasionally I'll do 20x, but look, not 20%, sorry. 10x. Occasionally I'll do 20x. But most of the time, the 3 to 5x range is adequate for most people. You don't need to go more than that. Remember, leverage is a risk management tool. Leverage is used so you can put less capital up front. So if you're putting less capital up front, then that actually means you're risking less. That is why leverage exists. Leverage doesn't exist to give you more money to gamble. So if you were going to put $1,000 into a trade in spot, leverage doesn't exist for you to put that same $1,000 in with 5x leverage and expose yourself to $5,000. No. Leverage exists for you to put in $200, so less than what you would have done in spot, but be able to get exposure to the same upside or downside. So it's capital efficient for traders because they can put less in and still maintain liquidity to invest in other areas. And if you're pretty confident that a level's hitting that you're bullish on, either to the short or the down or the upside, then leverage is a great tool for mitigating risk. And that's how you should think of it. Leverage is for risk management, not for risk taking. Leverage is for risk management, not for risk taking. And if you remember that, I highly doubt you'll ever get burnt on leverage ever again. And leverage is one of the only ways to execute some really cool strategies in crypto, like delta neutral strategies and hedging, and obviously options are one way to do so as well. But the flexibility it gives you is why it exists. It doesn't exist for gambling. Obviously, people gamble because humans are gamblers by nature. I understand that, but that's not actually why it was created. Anyway, guys, I'm going to get on with my weekend. I hope everyone has a lovely holiday and enjoys their Christmas period. If there's any really crazy market movement on the weekend, I might go live. But also, I think we should all just enjoy the weekend. Take a weekend off, reset, refresh. I know it's a Friday for some of you, so it's a Thursday night. So you might be like, why are you saying it's the weekend when it's not? It's later in Australia. It's mid-Friday. What I've got dropping tonight is very cool. It's an interview with Hasib. So Hasib, managing partner at Dragonfly Capital, he gave me an hour and 10 minutes of his time where I asked him everything from what's his favorite buy long-term to when he thinks Bitcoin will bottom to what narratives he's looking at. Super alpha packed show. That is dropping during the Friday banter slot in 12 hours time. So put your post notifications on if they aren't already, because in 12 hours time, that's an absolute alpha bomb. Excited for that to launch. But until then, enjoy your Christmas, and I will see you next week on Monday. Hope everyone has a lovely weekend. Peace out.